In today's video, we will explore 5 unique and powerful candlestick patterns that can take your trading game to the next level. From the Hikkake to the homing pigeon, the identical 3 crows to the Inneck, and a bullish kicking pattern, we have got it all covered. Whether you're a beginner or an experienced trader, these patterns hold the key to unlocking profitable trading opportunities. So, grab your notebooks and get ready to enhance your trading skills. Let's dive right in. The Hikkake pattern begins with a small inside bar, which is followed by a larger bar that engulfs it. This is then followed by a candle that closes in the opposite direction of the previous two candles and does not exceed the high or low of the first two candles. This forms the setup for the Hikkake pattern. In the case of a bullish Hikkake pattern, after the setup, the price action breaks above the high of the first two candles, triggering a bullish signal. Traders may interpret this as a sign of a potential bullish reversal and look to enter a long position. Are you tired of seeing your investments plummeting in a downward trend? Look no further than the bullish homing pigeon candlestick pattern. This pattern is a rare and powerful signal that a potential upward reversal may be on the horizon. The pattern consists of two black candles, with the second candle having a smaller body contained within the range of the first candle's body. This formation suggests that the selling pressure is starting to weaken, and buyers are stepping in to push prices up. So don't let your investments continue to plummet. Keep an eye out for the bullish homing pigeon pattern and get ready for potential profits to take flight. The identical 3 crows candlestick pattern is a powerful bearish reversal pattern that consists of 3 consecutive long red, bearish candlesticks. Each candlestick opens within the body of the previous candlestick and closes near its low, forming a declining pattern. This pattern suggests a strong shift in market sentiment from bullish to bearish. The selling pressure intensifies as each candlestick confirms the downward momentum. Traders interpret the identical 3 crows pattern as a sign of significant selling activity and a potential trend reversal. The bearish implications of this pattern are amplified when it occurs after a prolonged uptrend. The Inneck candlestick pattern is a rare but significant formation that can provide valuable insights into the continuation of a downtrend. In this pattern, 2 candles play a crucial role. Firstly, there is a tall red candle, indicating strong bearish sentiment and a prevailing downtrend. Following the red candle, a smaller green candle emerges. To confirm the presence of the Inneck pattern, several conditions must be met. Firstly, there must be an established downtrend. Secondly, the green candle should open below the previous candle's close. However, its close should occur at or slightly above the close of the prior day. This unique combination of price action signifies a potential continuation of the downtrend. The bullish kicking pattern consists of 2 distinct candles. The first candle is a bearish candle, indicating a previous downtrend. However, the second candle completely gaps up and opens above the previous day's high. This sudden shift in momentum is a strong indication of bullish pressure overpowering the bears. But here is where it gets really interesting. The bullish kicking pattern is not just about the gap up, it's also about the significant difference in size between the 2 candles. The second candle, the bullish one, is usually much larger than the first bearish candle, demonstrating the strength of the bulls stepping in. When you spot this pattern, it's a clear sign that the bulls have taken control of the market, potentially leading to a substantial upward movement. As traders, we can use this information to our advantage and plan our entry and exit points accordingly.